What's up, everyone? Welcome to episode 11 in my monthly series where I review my high yield dividend stock picks of the month from a year ago. So on my YouTube channel, I have a monthly series called Top 3 Dividend Stock Picks of the Month designed for high income, which I've been doing for almost 2 years now. So in that video, in those videos, I give you guys my opinion on which 3 funds I feel are very undervalued at that time and a great buy in that particular month, right? So in this monthly series, I'm basically going back to review those stock picks 1 year later to see if I was right or wrong and see how they're faring right now. So doing this holds me accountable for my stock picks and really further proves that I am always a complete, honest, and open book to all of you, which I know you all appreciate. And honestly, it's also to satisfy my own curiosity. I absolutely love going back and checking on my stock picks to see how they're doing 1 year later. So I know many of you disagree sometimes with some of my stock picks. So this is a way to actually see what happened 1 year later. So it's time to review my stock picks for the month of February 2021. I will not only check the share price, of course, but also the status of the dividend or distribution, which is a lot more important for us passive income investors. So was I right? Was I wrong? Let's find out together right now. All right, everyone. So pick number 1 was the Brookfield Global Infrastructure Securities Income Fund. Pretty long name. Stock symbol was BGI.UN. So this is an income fund or a closed-end fund. That's the technical term that invests in global infrastructure companies, like the name says, or that own and operate infrastructure assets. So Brookfield, in case you didn't know, they're an expert in infrastructure and real estate. That is their bread and butter. So at the time of this pick, it was a 586, which was giving you a dividend of 10.24%. Unfortunately, this is a quarterly dividend, not monthly, but it was at 60 cents a share, and it is 60 cents a share right now. So my key points and reasoning for this one is that this fund was heavily discounted because of weakness in infrastructure assets because of COVID-19, right? There's in infrastructure, you have also not just utility companies, but also toll roads, things like airports, stuff like that. So another good thing about this fund, solid fund manager, like I said, Brookfield. Really reliable, big asset manager in Canada that specializes in infrastructure and real estate. This fund had no dividend misses or reductions since 2013. This fund also has a lot of great regional diversification, a lot of utilities, which is defensive. And the main objective of this fund is distribution. So it's income rather than growth, which is great. Pick number 2 is HGY, the Horizons Gold Yield ETF, which is a covered call ETF. So this is one of the only ETFs that you could actually own physical gold. So this is actually physical gold, not gold producers with covered calls. Pretty cool. So the 1 year, let's just go with the stock price at the time was $555. So you would get an approximate yield of $595. Nothing crazy because this is physical gold, right? You're just making the yield of covered calls, not dividends or anything like that. So this ETF literally holds the SPDR Gold Mini Shares Trust, which is an ETF that is backed by physical gold. And covered calls are written on up to 33% of the ETF. That's how you actually get your 5.95% yield. So my points and reasoning for this one is that at that time, gold prices pulled back a bit because of the positive momentum and sentiment of the stock market. It was a great time to buy gold. As we know, when the stock market's on a bull run, gold typically shines less, no pun intended, because everyone's going into the stocks instead of the safety of gold. Also, of course, we all know gold is a hedge against inflation and future stock market crashes. And this fund is really only one of the only ways, if not the only way, to actually get dividend yield off physical gold. This ETF is designed really for income, not growth. So it's a great buy and hold investor. For buy and hold investors who want to participate also in gold price upside. So 66%, that's because they only write covered calls on up to 33% of the portfolio, which means that you capture at a minimum 66% of gold price increases. That's what I mean here. The monthly dividend does vary every month because it's based on the covered call premiums, but it usually hovers between 5 and 6%. In my opinion, this is a much better option than buying physical gold bars or coins, which make zero income and it's tricky to store and to sell. Pick number 3 is a small REIT Firm Capital Property Trust is a small Canadian REIT. At the time, the stock price was $6.56, which was giving you a yield of 7.77%. So this is a small cap Canadian REIT listed on the TSX Venture, although they recently came out with the news just a week ago that they're planning to graduate to the TSX. So this REIT, I liked it because it's very diverse in terms of property type. It has retail, office, industrial, residential. So there is also another REIT kind of with the same name, FCR.UN, which is also managed by them. So just to make sure, this is FCD.UN, not FCR.UN. So there you have the graph with the breakdown of the property. So my key points and reasoning: stellar property diversification, very similar to RealCan in my opinion, with a lot more industrial exposure. You see here 22%, a nice chunk. And the grocery that the retail is that they have, which is the biggest chunk, is mostly grocery anchored retail, essential service. So that's what I said in my second point. A really cool thing about this REIT is the amazing dividend increase history. The REIT increased their dividend 8 years in a row, and it's now at 51 cents annually. And we'll check the report card because, as many of you already know, make that 9 years now, because now it's at 52 cents. So obviously very attractive dividend yield of over 7%. It's a growth oriented REIT, great for long-term buy and hold investors, but a great source of income. Payout ratio has been under 100% at the time of the pick, so they have no problem paying out the dividend. So those were the 3 picks. Let's see how I did. Let's check out the report card. All right, everyone, let's check out the report card for February 2021. And keep in mind, you could download the report card for free in case it's too small or you want to see all the other picks on my website, passiveincomeinvesting.ca. You go at the top, the free tools and resource section, and you could download the report card there. So the Brookfield one, BGI.UN, it was a good pick for sure, up 12.29% a year later. So right now it's about $6.58. The dividend remained unchanged. It's still 60 cents a year or 15 cents a quarter. So pretty decent pick. It is infrastructure, so it's relatively boring stuff, stable defensive stuff, so we can't really expect an increase of 20-25%, but a good pick nonetheless. The gold ETF, well, right now it's at about $5, $5.07. So at the time of the pick, it was $5.55. So your capital would be down about 8.65%. Not really a big deal, but in my opinion, it was still a good pick. And the dividend, unchanged with a couple of stars. That's just to say that the dividend varies every month. You can't say it went up or went down, it was cut or it was reduced or increased. It just varies every month based on the call premiums from selling those cover calls. So in my opinion, this is a good pick. It's working as designed. This is really a yield enhancing way to own something very boring and safe, which is physical gold. So I personally don't have this one in my portfolio anymore, but that's just a personal decision I made. I feel I don't really need the safety of gold. If you have a very, very low tolerance for volatility and you're scared of the stock market, this is probably a good fund to always have 5% in. Also, BGI.UN, by the way, I got rid of it, not because I don't like it, because I swapped it for another fund that was probably near the same yield that invests in infrastructure and utilities. I can't really remember what I swapped it into, but another reason why is because it had a quarterly dividend, and obviously I prefer the monthly dividend. But Brookfield, I do trust them. This still is a good fund, but in my opinion, their best closed-end fund is on the US stock market, stock symbol RA, the Real Assets Income Fund, which has a yield of about 11%. So that fund there is much better than this one, in my opinion. The REIT, Firm Capital REIT, probably the best one of the month. So right now it's at about $7.65. So you would have made a capital gain of 16.61%. Pretty good. Also good news, they raised the dividend again to 52 cents. So it went from 51 cents to 52 cents. So that's 9 years in a row. Really, really good. They also announced their intention to go to the TSX, because right now they're on the TSX Venture, the smaller stock exchange in Canada. So that was probably the best pick of the month. But would I get it now? Probably not, because we have RS, right? The real estate split fund, which has all the best REITs in North America. In my opinion, it should be a one-stop shop for you guys for real estate on the Canadian market. So I'm not saying it's, don't get this one. The yield is under RS. That's why I wouldn't get it. But if you like a little bit of growth potential as well as income, and you're okay with 7%, then this would still be a good pick right now, or a good buy right now. So I would have to give myself an A overall. I mean, everything is good. The gold one, yes, it went down a bit, but that's only going to pop once the stock market crashes. So all in all, I would have to say another good month of stock picks. Thanks for watching, everyone. I really appreciate it. Please show your appreciation by hitting the like button, hit that thumbs up button. It's free for you. It takes 2 seconds and it helps the channel grow. So it's a win-win. Also, if you like this type of content, this channel is all about investing for passive income. There's stock picks. I got a lot of great content coming up. I'm always thinking of new content. So make sure you're subscribed and hit that little bell button next to the subscribe button so you're notified every time a new video comes out. You don't want to miss my new content. We also have a website. Make sure to check it out, passiveincomeinvesting.ca. That's where you could purchase my digital product, the ultimate DIY investing package, which is on version 3 right now. I'm very proud of this product. It's a companion tool, a reference tool to really help you build your own portfolio, whether you're a Canadian investor or an American investor. There's sample portfolios in there according to different investing styles, not just income, what I do, but there's also some growth and dividend themed sample portfolios in there. And it comes with lifetime updates, so you only need to purchase it once. So make sure to check out my website for all the details on this product. There's also a video there where I show from A to Z what this product is, so make sure to check it out. Also on my website, I offer right there on the homepage a one-on-one consultation service with yours truly, me personally. It's a 1-hour Zoom meeting face-to-face in case you want more personalized help, where I go over your situation, help you build a portfolio according to your own needs, answer all your questions, help you transition a portfolio. Whatever your needs are, I will do my best to help you. I love doing these sessions. I limit myself to 4 a week. They sell out very quickly, so I apologize for that. I know many of you keep sending me emails. I always miss the consultation. Well, I can't do more than 4 a week because I need the time also to create more content. So just look at the little message on the homepage there, right on top of the calendar, to get a status if the calendar is open or not. But I will let you guys know via YouTube community post and a Facebook post when the new appointments are open. Speaking of Facebook, make sure you join our Facebook group, which is almost at 10. We're almost at 10,000 members now and going up every day. So it's a nice little group where people post their questions, they put their portfolio, and we all try to help each other out when it comes to passive income investing. So make sure you join us there. We're also on Instagram. If ever you want to know a little bit more about our personal day-to-day life, you could follow us on Instagram if you use that social media platform. Don't forget, guys, the mission of this channel, my mission, will always be the same. It's to help everyday, normal, regular working people to invest on their own in order to build their own stream of passive income to enhance your quality of life and when they become financially independent. So how do I always leave you? Make sure to continue staying safe, stay healthy, and of course, stay passive. See you next time.